Hello, and welcome to another episode of Connecting the Dollars. Today, we're going to be talking about cash management and short term savings. With inflation increasing and the interest rates in savings accounts decreasing, here are a couple of options to consider, the pros and cons. We're just going to go through them and how they differ. Amanda, when you are talking to clients, what are you seeing in terms of the structure of savings? Do people tend to have a lot of emergency savings, like in literal cash or in just an extra savings account that they can access?
Nobody's the same, but in general, we do see people with way too much cash in their checking accounts. This is not the best way to handle your cash, I would say. I think a lot of people do this just because it's easy, it's a default. They don't want to take down the time to sit down and deal with this. But by keeping too much money in cash, it is costing you money because you're losing out to inflation. And especially we've seen inflation back on the rise again. This is an issue.
And in terms of using actual cash, like I was trying to think about when would I actually need a decent amount of cash, let's say $1,000 even right away. And brainstorming, I can't even really think of a situation in which I couldn't use a credit card or find a way to just use a different method. So these days, I think it's even more important to have your money invested. There's no real downside to have your money in an account that could be earning money for you.
Yeah, and I think you need to keep some what we call emergency savings or a cash reserve, but that doesn't mean it has to be in cash or it doesn't have to be in your checking account.
In your hand, yeah.
Yeah, and then I think obviously you want to keep some like physical cash in your wallet or on your person just for life, whatever. But we're talking about like larger sums, what to do with your emergency savings. And we beat people who they don't know what to do with the cash and then they kind of get stuck. We want to go through some different choices today, right? So I would say one choice is a CD, right? It's a traditional thing that people tend to think of to keep your money safe in a bank and you can earn some interest on it. CDs are fine, right? But the main issues with CDs is that they're not liquid. So you might have a decent interest rate, but you have to keep it in there for a year, 2 years, whatever the term of the CD is. And if you need money before that date, you pay a penalty, and then it substantially reduces the rate that you earn on that. So if you do want to go the CD route, it should be for something that's more long term, like you set some money aside to buy a car, you're not buying this car for at least a year, put it away so you don't touch it, that kind of thing. But for true emergency savings, we don't really recommend using CDs because of the liquidity issue.
So, what about a high yield savings account?
Yeah, so high yield savings account is a great option for most people to use. I think some people will default to the regular savings account at their bank. And then you ask people what's the rate you're making on those, and a lot of people don't know. But on average, I Googled it and it was between 0.3 and 0.65% is an average savings rate at a generic bank account. High yield savings rates are 3 to 4 in that range recently. And so that's just a significant difference if you're keeping 3 to 6 months of emergency savings in the interest rate you could be making on that money, especially if the generic savings rate is less than 1% and the inflation rate is much higher. So you're still losing money at the end of the day by keeping it in savings rather than putting it in a higher interest rate vehicle.
Yeah, and these high yield savings accounts that we're seeing, you're not actually invested in anything. Your money is just held at this bank, and the rate that they're offering you is sometimes based on a promotion or it's not explained fully, and the rates can change at any time. So that's another thing we wanted to talk about, that it differs from a brokerage account where in your brokerage account, it acts like a savings account, but you can actually invest in different vehicles.
I just wanted to say lately the high yield savings rates have been coming down and the rate is determined by market forces, right? What are the other banks offering? Does the bank want to have a loss leader to try to get more customers in? So they're offering a promotional rate that then changes. Lately, the Fed has been cutting rates, and so the rates have been lowering in step with those. But so, for example, currently in June, when we're recording this, the odds of the Fed increasing rates is starting to go up. But we don't expect the banks to start increasing their savings rate in line with what the Fed rate is doing, just because it's more about what the other banks are doing and what the competitive landscape looks like for them rather than necessarily what the Fed is doing with interest rates.
Exactly. So, yeah, as we were saying, a brokerage account would be the next step up in terms of it's your money, your cash still being somewhat liquid, but invested. You'd be able to invest in a mutual fund or an ETF in this type of account. So, what are some of the mutual funds or other investments that are available when you put your savings in a brokerage account?
Yeah, so I feel like a lot of people don't realize that you can use a brokerage account just for cash savings. A brokerage account doesn't have to only be a place where you buy stocks and bonds or invest your money in the stock market. You can also use it for cash or cash equivalent vehicles for your money. So, depending on the brokerage house you're using, they will offer different money market funds that you can buy, like a mutual fund or sometimes in an ETF form. So, like Vanguard has their specific money market fund, or Fidelity or Schwab. And so, depending on which one you're using, then you would probably want to buy that version of the money market. And when you look at those, you can look up the rates that they're paying and then compare that to your high yield savings account, see which one is better. I think one thing to point out there is a lot of times the high yield savings accounts will quote an APY, and an APY is different than the interest rate that a money market might report, right? So if the money market is paying the interest rate, you earn that interest, say every month, you put that back into the pot, you continue to earn your interest on the interest you just made, right? And so over a year, that will give you your APY, your annual percentage yield on the funds. So usually the API is going to be bigger than the interest rate. So there's online calculators you can use to compare these numbers to compare apples to apples when you're doing this. Do you want me to talk about ETFs, right? You can buy, aside from money markets in a brokerage account, then you have access to different ETFs, right? And you can buy Treasury ETFs and they will pay a certain interest rate. Those can be a good option if you're tax sensitive. They have a nice little bonus that you don't have to pay state and local income tax on the interest that you get from those Treasury specific ETFs. So when you're comparing those interest rates, you want to also take that little tax bump into consideration as well.
Very good. Yeah, so there's a lot of options that you may not have known about just for your short-term cash management. And when you start to think about it as a strategy going into your whole financial plan, it opens up a lot of options and really just opens your eyes to what's out there and what you can take advantage of and have your money working for you.
I tell people, a lot of people lately are really feeling squeezed from inflation. Studies are showing that wages aren't keeping up with inflation like they were a year or two ago. Prices are going up. The consumer confidence level is at record lows. So I tell people you got to squeeze more juice from the lemon, right? And this is just one little way you can do that to just make sure you're maximizing the interest rate you're getting on your cash. It's not going to be huge numbers, but it's something.
And it can add up, especially over time.
Yeah.
I think that wraps it up there. If you have any questions, please contact us, propelfinancialadvisors.com. You can find a way to contact us there. And we're also on social media, LinkedIn, YouTube, Instagram, Facebook, at Propel Financial Advisors. And please, if you're watching on YouTube, subscribe and give us a comment. Tell us if you learned something today. We'd love to talk about it. All right.
Bye.
Thank you. Bye.